So, imagine this. It's January 20th, 2026. The market's just doing its thing, everything seems normal, and then, boom, the bottom just falls out. We're talking a complete nosedive, and for a few crazy hours, nobody has a clue why. Traders are panicking, phones are ringing off the hook, the whole financial world just grinds to a halt. What on earth could cause a shock that big, that fast?
Yeah, that was the question on everyone's lips. Why? Why did the market just drop over 2% in a single day? This wasn't some slow, predictable downturn. This was a straight-up shock to the system. And the reason? Well, the reason was something nobody, and I mean nobody, could have ever predicted.
You are reading that correctly. Greenland, that giant icy island way up in the North Atlantic. I know, it sounds like a joke, right? Like a headline from a comedy show. But this was the geopolitical bombshell that sent global markets into a complete tailspin. So, how in the world did we get here?
Okay, let's dig in. In this first part, we're going to unravel this completely bizarre story. We'll look at the actual numbers behind the crash and the very specific threat that caused this wave of panic.
And look, this wasn't just one little corner of the market taking a hit. This was everywhere. The S&P 500, down over 2%. The tech-heavy Nasdaq got slammed even harder, dropping almost 2.4%. And the Dow fell 1.76%. This was a full-on, broad-based panic sale. It wiped out gains across the board.
And here is the why. A threat was made to slap escalating tariffs on major European allies, starting at 10% and jumping all the way to 25%. There was even talk of a ridiculous 200% tariff on French wine. And the condition to make it all stop? Get this, that Europe would basically hand over Greenland to the United States. Well, as you can imagine, the EU's response was to start prepping 93 billion euros in its own retaliatory tariffs. And just like that, a new, completely unpredictable and frankly kind of insane trade war was suddenly on the table.
But, the stock prices alone don't even tell the full story of the panic. To really get what was going on, you have to look deeper beyond the Dow. You have to look at what the market's own fear gauge was doing and where all that scared money was running to hide.
This number right here, this is a snapshot of pure fear. It's the one-day jump in the VIX index, which everyone on Wall Street calls the fear index. A nearly 28% spike in one day basically tells you that uncertainty just went through the absolute roof. It means investors were scrambling, paying huge premiums to protect themselves from even bigger drops to come.
So where did all that money run to? You guessed it, gold. The price of gold just exploded to a new all-time high of over $4,700 an ounce. It's a classic move. When investors get spooked by politics and trade wars, they dump risky stocks and pile into the one thing that's been seen as a safe store of value for thousands of years. And this was the real psychological blow. The Nasdaq, the engine of the entire market, home to all the big, innovative tech companies, was officially pushed into the red for the year. That's not just a bad day. That's a huge deal. It signals a massive reset of expectations and a total loss of momentum for the most important part of the market.
Okay, but here's where things get a little weird. It makes sense that people ran to gold for safety, right? But at the exact same time, US government bonds, which are supposed to be the safest asset on the planet, were also getting sold off. So what gives? Why would investors be selling both their stocks and their safest bonds?
Well, there are a few things going on here. First, think about it. The source of all this risk was coming from the US. So foreign investors, like big pension funds in Denmark, started dumping their US bonds. Second, tariffs. Well, tariffs make things more expensive, and that stokes fears of inflation. And when investors think inflation is coming, long-term bonds look way less attractive. So for the first time in a while, US bonds just weren't seen as the ultimate safe place to hide.
So with all this chaos, all this confusion, what is an investor supposed to do? This is where we get to the most important part of this whole thing. Learning how to separate the short-term, headline-driven noise from the real long-term signal.
Just take a look at this. On the left, you've got all the noise, the Greenland drama, the VIX spiking, the crazy headlines. This is the stuff that makes you want to panic sell. But on the right, you have the signal. These are the huge structural trends that are actually driving the economy, like the AI revolution or the reshoring of manufacturing. These are the things that build wealth over years, not days. The trick is to keep your eyes on the column on the right, even when the column on the left is screaming at you.
And this quote just nails it. When things get crazy and volatile, the market's appetite totally changes.
It stops chasing those high-flying, maybe profitable someday growth stocks and starts craving stability. It wants boring, reliable companies with real cash flow and a solid dividend. You know, companies like Procter Gamble, which suddenly looked very, very attractive amidst all this chaos.
Okay, so let's get practical. What should you actually do on a day like this? Well, it really all depends on your time frame. So let's break it down for both short-term and long-term investors.
All right, if you're a short-term trader, your playbook is simple. Caution. This is not the moment to be a hero and try to catch the falling knife. The smart play is to just wait. Wait for that fear index, the VIX, to calm down and get back below 18. Ignore the political drama, focus on what the companies are actually earning. And please, whatever you do, do not use leverage when the market is this choppy.
Now, for you mid to long-term investors, it is a completely different story. This isn't a threat, it's an opportunity. The advice here is to start buying quality companies in stages. Don't go all in at once, but start taking advantage of the sale. If you have a regular investing plan, just keep doing what you're doing. Dips like this are literally why dollar-cost averaging works so well over the long haul.
And that really brings us to our final and honestly our most important idea. It's a mindset shift that really separates the successful long-term investors from everyone else who just reacts to the day's news.
I want you to really let this one sink in. The market's temporary panic is the long-term investor's greatest opportunity. Days like this, days fueled by fear and irrational headlines, are when fantastic, high-quality companies go on sale. Being the person who can stay calm and rationally buy when everyone else is freaking out, that is one of the most reliable ways to build serious wealth over time.
So I'll just leave you with this one last thought. This panic, this crazy headline about Greenland that feels so massive and important right now, are you even going to remember it a year from now? Probably not, right? But the decisions you make during these moments of panic, trust me, those are the ones that will shape your financial future for years and years to come.